Okay, so there's a lot of confusion and misunderstanding surrounding taxes in Thailand, and I want to put these issues to rest right here in this video. That's why I'm joined by Kun Pacha, who is a Thai tax attorney, and rejoined by Kun Thomas, who is an international tax expert. And together, we're going to go through laws and official announcements by the tax authority, demographics that are not liable to pay taxes in Thailand, and any tax minimization strategies that you can utilize and ones that are no longer valid, what to expect in the future, and how to prepare. Obviously, all this information is presented to you for free in this video with takeaways that you can implement for free, but every person's situation is unique. So there comes situations where you do need personal consultations, and that's where they come in. So I'm going to link to how to get in touch with them in the description of this video. The link just popped up here. You guys offer a free tax consultation.
Yeah, for you. Anybody's watching the video, there's a free half-hour consultation.
Right.
They can call in. We can do it in person in the office, or we can do it Zoom or Skype anywhere in the world.
Excellent. Right. So, okay. I think we'll start with you, Kun Pacha. So we'll talk about like a timeline, of what's going on here with the situation of paying taxes in Thailand.
Generally speaking, the law on taxing foreign source income in Thailand has been in effect since 1951 and has been stipulated in Section 41, Paragraph 2 and Paragraph 3 of the Thai Revenue Code. In the past, this law was interpreted to mean that a Thai tax resident is only required to pay tax on the foreign source income that remit into Thailand if this foreign source income is remitted in the same year that this income was earned. Since 15 September 2023, the Revenue Department issued the order. It's called the Revenue Department Order for number 161 and number 162 here, or the new tax regulation, to change the interpretation of the law on taxing foreign source income. Okay, well, for easy explanation, under this new tax regulation here, to determine whether in the year that you remit foreign source income into Thailand, that year you have the legal obligation to file a Thai tax return or not, there are three conditions to determine
Whether you'd file a tax return.
There are three conditions to consider. The first condition is in the year that you remit the foreign source income into Thailand, in that year, do you stay in Thailand for 180 days or more? Second condition, was the foreign source income that you remit into Thailand earned or arisen during the year in which you stay in Thailand for 180 days or more? And the third condition, the last condition, such remitted income must be the income earned since 1st January 2024. So if in that year, the year that you remit foreign source income into Thailand, and that year you meet all of these three conditions, condition 1 plus condition 2 plus condition 3, so in that year, you have the legal obligation to include this remitted income in your Thai tax return in order to calculate your personal income tax. So this new tax regulation came into effect since 1st of January 2024.
Thank you for that. That's an excellent factual assessment of the situation. Let's like repeat that in a way that see that we understand this correctly.
This is where I come in a little bit on this to translate the English on this.
Exactly.
Okay. The rules changed in September 2023 to get rid of the prior rule that said if the income was older than 1 year or earned in a different calendar year, it could be brought into Thailand free of tax.
That was the status quo.
That was status quo for decades. And even prior, so you would walk into a tax office and say, I brought in income that I earned this year to this. It was inside this year. The Thai revenue authorities would even tell you, go away. We don't even know how to do that. even if it was inside the same year. But they changed that to broaden their tax base and try to get rid of.
This is the announcement that they issued, and we'll include this in the description. You translated this, right? Oh, this is an official announcement about that. Say, regardless of when you made the income, if you remit it in, you need to file a tax.
Exactly. Now,
this is the announcement.
With a couple caveats here, and this is what she was getting into, the technical on this. Okay. What they did give us was a little bit of a grandfather clause. And the income earned prior to January 1st, 2024, exactly, is not taxable. So if you had money from savings and income from prior years, you don't have to go back 20 years and say, I earned this, I was tax resident this year. They start this January 1st, 2024 for anybody who's been continuously resident here. Okay, now one of the keys to this is, if you are not resident in this country for 180 days, none of this applies to you. Say this year, I'm not going to get tax residency, but I'm going to go buy a condo here. Do this. I can bring in an unlimited amount of money if I'm not tax resident here.
Right.
Okay. But now on January 1st, 2026, I establish my tax residency for the 2026 tax year. So from that standpoint, when you first begin your tax residency, that's when this backdating issue starts. Your prior earned income can be brought in free of tax into Thailand. Only income earned after the January 1 of the year you start your tax residency becomes taxable with it. So for a lot of people, they don't have to go, there's not a lot of juggling here saying, I have to worry about prior years. When you're buying a new piece of property here, you're gonna move in here and retire to this, you really don't have to worry about the stuff until you become tax resident that year. That's the year you start worrying about this income.
I need to simplify this even another level. So for example, because I'm a real estate channel, so say someone is coming in, they're considering buying property. It's 2025 right now. You're just determining whether you want to live in Thailand. So you're not a tax resident yet, because you're just going back and forth. You're not here more than 6 months. Let's say you do decide to buy a property here, but you're not a tax resident yet. You bought the property, you brought money in. That money that you brought in, whether it's 30 million, 50 million, 10 million, because you brought it in while not being a tax resident, you don't have to worry about that money. Once you live here, let's say you bought from and you decide to be here more than 180 days, from when you establish your tax residency, that's when you start worrying about filing tax returns.
Yes, but even a little more generous, because say you haven't bought your property yet, but you have, in December you have 60 million baht sitting in your account overseas with this, but you begin your tax residency on January 1st, 2026. Because that money was savings from a year you were not tax resident, you can still bring that money in and buy the condo in the year you're tax resident. Now, if for some reason you were earning 60 million baht in 2026 and you started your tax residency in 2026, that's when you're taxable to it. But it's all based upon the date you start your tax residency. That's the start date of when your income earned becomes taxable in Thailand if you bring that money in to Thailand.
So the conditions are, number one.
Condition 1, again,
Yes.
in the year that you remit the foreign source income into Thailand. In that year, do you stay in Thailand for 180 days or more?
Yes. You have to meet that first. And then number 2.
Was the foreign source income that you remit into Thailand earned or arisen during the year in which you stay in Thailand for 180 days or more?
Yeah. Okay. And the third condition.
Such remitted income must be the income earned since 1st January 2024.
Okay. So like you said, that's pretty generous, because then those 3 conditions all need to be met in order for you to file a tax return for that year. So this opens up a bunch of demographics that don't need to worry about this, right?
Tremendously. I mean, if for those people who are buying a second vacation home here, especially, to be here 3 or 4 months, no issues. And the next year, if you're not bringing any money in the year you are tax resident to this, because you've already bought your condo and you funded your lifestyle for that year when you weren't tax resident, you're free and clear of taxation.
So Khun Pacha, can you then elaborate on, give us examples of demographics that are not liable, because I think a lot of people who watch this video, I'm sure they're really paying attention to all the nuances because it's very important. But I think it'll be very helpful to give a list of demographics that they can listen to and identify with, so they can immediately slot themselves, okay, I'm part of this situation and I don't have to worry about taxes.
Okay, the first example, if you stay in Thailand for less than 180 days, and then you remit the foreign source income into Thailand, so you are not required to pay tax on the foreign source income that you remit into Thailand. Second example.
So if I'm never a tax resident, I come here every year,
Yeah.
but eat every year less than 183 days.
80 days.
80.
Yeah.
Less than 180 days. I can remit as much as I want
Yeah.
because I'm not a tax resident.
Yes.
Don't have to file a tax return.
Correct.
Okay, excellent. Next example.
Second example, in the year that this foreign source income is earned, and in that year, you do not stay in Thailand for 180 days or more, so you are not required to pay tax in the year that you remit this income into Thailand, no matter which year you bring this income into Thailand.
Let me rephrase that. Okay, and again, this goes back to the second one. So that clock that we've all been here since January 1st, 2024 with us. That clock resets every year you lose your tax residency. So I could have been living here for the past 10 years. I lose my tax residency 2025 for some particular reason with it. So I go into the US or I stay in Bali for 4 or 5 months. I can then bring unlimited amount of money starting January 1st, 2026 that I brought in because all of that was earned prior to becoming taxable with it. So that January 1st, 2024 date resets to the day you begin your tax residency moving forward with it, so to speak. You know, it's a complex thing on this, but you know, a lot of people, especially who are going to build an expensive piece of property to this, right now, this is the way to do this. Now, there's some speculation that they may ease the rules on buying real estate. We can go through later on with this, but that's the speculative category from what they've talked about with it.
Okay. Any more groups?
Third example, if you stay in Thailand for more than 180 days per year and you don't want to pay tax on the foreign source income, so the solution is not to bring that foreign source income into Thailand. You can see that the new tax regulation taxes foreign source income only when it's brought into Thailand.
Right.
Yeah.
So as it stands right now, Thailand is not taxing global income. It's only taxing foreigners' earned income that was remitted.
Yeah, remittance basis.
So there may be some people out there who are fortunate enough to have brought in enough money prior to all this to live off of it for the rest of their lives and don't have to worry about this at all.
Yeah, that's the only thing they would be paying tax on is the interest or income they receive here in Thailand with it. And that's generally, especially for the first year you move into Thailand, in the year before you're going to do that, bring some money into Thailand.
Yeah. Any other groups?
Yeah, fourth example, not all types of the foreign source income that remit into Thailand will pay tax in Thailand under the new tax regulations. For example, the government pensions or the federal pensions from USA, Canada, UK, Germany, Switzerland, or France, and etc. The double tax agreement between these countries and Thailand stipulates that only source country has the exclusive right to tax this government pension. So if these nationalities stay in Thailand and remit only the government pensions into Thailand, so Thailand does not have the right to tax these government pensions. Because this government pension is tax exemption in Thailand. Yes.
Does this apply to most government pensions?
Most.
It's tax treaty by tax treaty on this.
But the main countries,
Australia being the big exception on this.
Australia being the big exception, US, UK, etc., Germany, these big, France, these big countries, government pensions are not taxed.
Yeah. Now, to be exact on this, because there's two types of government pensions, and she'll go through the next one of those. This is specifically for an employee who worked for those governments with this.
Yes.
So in the particular case of the U.S., oddly, it's only federal government employees to this, because states are not subject to the tax treaties with this due to state sovereignty. But Canadian government employee pensions, the British government pensions, the German pension, the French person, I think we went through Switzerland yesterday to this. There's 61 tax treaties. If this is a question, give us a call. That's one of the things we tell you about in a half-hour thing on this. But specifically for government pensions, you're very, very clear to this. Now, do you want to go through Social Security?
I have a question about that, though.
Sure.
Even if we tell you that, even if you know from whether watching this video or from the internet that, let's say you're American and you earn Social Security, if you know for a fact that that is not taxable in Thailand, do you still need to file a tax return because you did remit income?
This is one of the largest debates in Thailand right now of anybody who's discussing this. Okay. And you can go to the revenue department and get different answers. The compliance department, which is who you file to, will tell you one thing, and they'll tell you no because they don't know how to do this. The legal department, and don't get me wrong, they're trying to write the rules as they're doing this. The legal department is saying, yes, you're required to file this. Now there's a logic trap in this, okay, that makes it pretty clear you need to file, because
makes it pretty clear you need to file.
With the logic trap on this. The banks will begin to report with 2 million Thai baht or 400 plus 400 transactions a year. The banks automatically transmit that information to the revenue department. So say you are bringing in 2.5 million Thai baht in the country, and it is free based upon tax treaties with this. How does the revenue department know that money is free of tax? Do this. They don't until you tell them by filing a tax treaty and making a disclosure stating that this is free of tax using a tax treaty. So
in my opinion, under the current interpretation of Thai laws nowadays, there is no provision that exempts a Thai tax resident from filing a Thai tax return. Even the source country has the exclusive right to tax this income. Yes.
So by law, she's saying you have to file it, and that's what the Thai legal department is saying in revenue. They're saying that it's required to file. Now, part of the problem with this is the forms are inadequate at this moment. So I don't even know what site to go to. No, well, it's what we do is we've talked to the revenue department. You can electronically attach disclosure forms to this. So we put the information in the front of the return properly. We then attach a statement back that this money came in and was remitted. What that really does is it prevents them from coming back a year or 2 or 3 later and saying, hey, you brought in 3 million baht or 4 million baht, 1.5 million baht. Why didn't you file a tax return? Because again, they don't know this money is free of tax until you've told them this, because there's your bank in the U.S. that's wiring this money in or from Europe isn't going to tell this is tax treaty income. So the logic trap is, you need to disclose to prevent the questions coming up later on, because that's going to be more expensive fighting the revenue department to explain this later on than it is to file a simple tax return this year.
Another example, if a person remits the foreign inheritance into Thailand and the value of the inheritance is less than 100 million Thai baht, so this kind of inheritance will not be taxed in Thailand under the new tax regulation.
It will not be taxed, but I'm assuming since it's such a big amount, you should file a tax return if you're a tax resident?
It depends on your choice. Filing a tax return is a way of self-assessment. File or not file depends on your choice. But in my opinion, filing a tax return can be a preventive measure from assuming by the revenue department that this income should be taxable in Thailand, but in reality, this income is tax exempt in Thailand.
That's actually a good way to put it. Filing a tax return, if you're a tax resident and you remitted money, is a preventative measure.
Exactly.
Yes.
You can do. It doesn't mean you will pay any tax. It just means you filed to say that you don't need to pay tax.
That's the system that's being implemented before anything else is.
Okay. Any other groups that...
No, that's all.
Social Security? Do it.
Well, that's government pension.
No, to this.
Oh, okay.
Okay.
Yeah,
Whack away.
like a cell.
Okay. Yeah. The Social Security, while it's a state pension, you didn't work for the government to do it. Okay. So, a perfect example of this is the old age pension in the UK. You obviously, even when you're on unemployment in the UK, you contribute to your Social Security, your Social Security equivalent called an old age pension to this. So now in the US, I'm lucky as an American that Social Security is only taxable in the US with it. But most other tax treaties don't have any notice of this whatsoever, or they don't mention that old age pension that is guaranteed to everybody with it, as in the UK has with it. But there are separate clauses to this. And she's the star of this, by the way, so figure this out. Section 40 or 41 of the Thai Revenue Code.
Section 42, subsection 25 of the Thai Revenue Code.
There's a reason I hired her. Do this. States that Social Security is not taxable income. Okay. Now there is a Thai version of Social Security with this English translation, but there's another clause in most tax treaties, specifically the ones we mentioned, that's called a non-discrimination clause I mentioned earlier. Non-discrimination means that the individual has to be treated the same as if he's a Thai citizen here, and the income types have to be treated the same. So like in the UK, the old age pension is a Social Security equivalent. Therefore, while it's not specifically said in the UK Thailand tax treaties, that's taxable only in the UK, Thailand does not tax it by its law. So unless they change that law, they still have to treat it as Social Security here, and it should not be taxable here with it. So now the Revenue Department has not yet ruled on this. To this, we're sending this up. But we've talked to them, and they have made statements that is not taxable here to this. So Social Security equivalence, because that word is not used in all these different languages as to this, should not be taxable here because it's not taxable by Thai law to this. The very few exceptions to this in tax treaties on the non-discrimination clause is the big one is Australia. Australia, unfortunately, does not have a non-discrimination clause in its tax treaty, but it's still arguable that that's a Social Security equivalency, and that Thailand should not be taxing it. But that's not protected by the tax treaties as much as the other countries are.
This is all great information, but just a takeaway here, just to really, really dumb it down. The takeaway I'm getting here is if you're not a Thai tax resident, don't worry about getting taxed here.
Yes.
Period. Absolutely. Period. If, however, you are a Thai tax resident and are remitting a decent chunk of money in, it wouldn't hurt to file a tax return as a preventative measure. Is that something that we can say?
Yeah, absolutely. What that's going to do is it's going to prevent questions coming up later on.
So before we move on to the next section, I want to follow up by saying, okay, if you think it's a good idea to as a preventative move to file a tax return, as of now, how easy is it to file a tax return?
The problem.
I mean, we wanna do this.
This is a reason we're talking about this.
How easy is this?
The problem with this is right now the rules are so vague that if you walk in and you ask the Thai person how to do this, they're not going to know in the Revenue Department to this. And especially with the international income and international tax treaties, we've had people high up in the law department saying, "I don't understand tax treaties." To this, you really, if you're outside of incredibly basic stuff, need to use one of the few set of professionals that really talks about and understands tax treaties with us. We're one. To give a plug, Carl at Expat Tax is a very honest guy too. They're a good service as well to this. But if you want to be safe and protect yourself, that's where to go through with these things.
I guess
because the complexity of this is, like an example of this is there's nowhere in the form to put Social Security being remitted in the country, and then this is exempt by tax by a tax tree. That's got to be written out in the legalese on a separate attachment that has to go electronic with this. These are all the joys of this process, to it. It's not this will get ironed out over years to this, but right now the system is chaos into this.
So it sounds like even if I want to file, there's no proper protocol or channel established right now.
Formally, yes. Informally, the very good tax professionals have been working with the revenue department to find out the procedure.
If I just want to, if the viewer wants to do it on their own.
No, you're not gonna figure out how to do this in any real way. The rules are just not published in this yet.
Oh.
This is part. Now, one thing about the Thailand now, okay. This was changed in September of 2023.
I would think they'd figure this all out before giving out these announcements.
But the reality of it was, unfortunately, it wasn't. The minister thought this was a tax loophole and he would just close this, not realizing how complex this was. Thailand should have paused this for a year or two. And I was, in the early part of last year, I said, they're going to pause this. They don't have the regulations. They don't have time to do this. The problem with this was, as we know, there was a government change in the fall of last year. The new revenue minister came in. He's got no idea this is even a problem or existing. He didn't have the time to put the brakes and say, let's post this forward for another year. So the revenue department, God bless these people, because they are actually working hard on this. They're trying to figure out the rules that just are not formally there. There's chaos in the system because the regulations did not have enough time to be written in this. They should have delayed, but they had a power change in government. So the revenue minister kept this on starting effective January 1st, 2024. So now we're having to report back for last year for revenue that is taxable here to this. Now for revenue that's not taxable in Thailand with this, you've got problems with this because the forms themselves are not capable yet because they were not able to update the forms to say I've got the Social Security coming in from the United States, 2 million baht, which would be a large amount of Social Security to this. That's not taxable here. But how do I even put that on the tax return? You should have a statement on the tax return that says, I remitted this amount of money from foreign sources. And then there's a line item below that that says, this was exempted by tax treaty income for Social Security. That does not exist. So anybody who's trying to figure this out on their own and the format of attaching that electronically is going to be almost impossible. I mean, you can file this electronically to this, but the electronic form is only in Thai at this particular moment. There is an English language paper form, but you can't attach the tax treaty document to this. You need to go with one of the few firms that's been talking to the Thai Revenue Department on a regular basis and file this. Because while there aren't formal regulations, we've talked to the procedures informally with the Thai Revenue Department, and they said, yes, file this particular way. They may change that in the future with the regulations, but they've given us guidance that this is a valid way to file this. One of the big benefits everybody has is that Chacha, who's a real star of this, has gone in for the past 8 months and worked with the Revenue Department personally on trying to get these procedures in place, trying to write letters and getting judgments down on this. To this. She's put a huge amount of time and effort into doing this. And now, one of the things about this too, in filing a tax return, the 95% of the Thai tax returns we're doing is $400 US to this. This isn't a case of, tens of thousands of dollars on this. We're charging $400 for 95%. There are some people who have some extraordinary issues that are more expensive, but even then, $800 is 95% of the other 5%.
8 or 4? You just said 4.
No. So now I clarify that again. So the 95% of people are $400 to this, to do a Thai tax return, okay? Out of the other 5%, 95% of that is within $800. So you got 4.8% of the other part of it is $800. There are a couple of people who have been $1,000. Yeah. This is not, the compliance cost on this is not extraordinary to this. We're trying to make this as reasonable for everybody, but we're trying to ride the dragon and keep the chaos in control for everybody. But as a layman, you're probably not going to get this right because even the local offices don't yet really know how to do this. Now, it's valid to say with the tax treaties, because they have not yet ruled on the having to file using tax treaties, it's valid to say, hey, I'm going to wait on this. But if you wait on this, they can come back 2 or 3 or 4 years later, and then you've got to deal with them because you haven't filed a tax return. They think you're taxable, and you're going to have to go through, I'm not going to use the word audit, but serious discussions with them. You're going to have to generate a return pretty quickly because they can freeze your passport should they choose you to do this. You end up with problems later on potentially. If you do file the tax return now and this money is not taxable to this, you're not going to owe any tax with this. You're just going to have prevented problems later on. So it's really how your level of conservativeness on whether I want to deal with this later on or not. To it. And a lot of people for the first year especially, i.e. last year, they're taking a wait and see approach on this. Even some of them are like, this isn't even legal, blah, blah. We've gotten rid of that case. But, I'm living off of my U.S. Social Security. It's not taxable. I don't have to file a tax return. And wait to see what they say. Now, you may have to go back a year or two from now and then refile. You may not. But the logic of this says you are in that filing threshold. You're probably going to have to file at some point in the future, but it's everybody's level of risk they want to do this.
Okay. So it sounds like even if you wanted to file a tax return, the current infrastructure does not allow that.
You've got to go to
utilize a firm that has been working directly with the revenue deposit to facilitate this. Unfortunately, to the audience, that probably sounds like, it's totally to your advantage because they have to come to you, right? But that's unfortunately the situation at hand right now. And you guys need to charge something for your time.
We put a lot of effort into building this to this and within research to this. And we were expecting them, and we've talked to them in advance to say, you need to put this on the form with us. We talked to them and tried to work with them to help them get that form done. They just did not have the time to do it.
So they acknowledge forms need to change.
Oh yeah. And what you're going to see right now is the entire system is in absolute chaos. They are coming out with regulations. They're talking about, doing a revenue ruling that states that even if it's exempted by tax tree, a return has to be filed. But all of this in a bureaucratic system, which is any revenue department is, just take time to feed back and do this. So as chaotic as it is for filing in 2024, there will be a whole lot more rules in place for 2025. 2026 will get to be even tighter and tighter.
It'll most likely get easier and easier.
Easier and easier to file. Within 3 years, you should be able to do this on your own unless you're doing something exotic like a tax treaty part of this.
Okay. It's just that the unfortunate reality
right now
is you probably need to use
a professional. Yeah.
Professional. Okay. Okay. Let's get on to the next one. Any tax minimization strategies that people can utilize, or any existing ones that have been invalidated?
The biggest one is an invalidation issue with it. With the last video we did and up to last year, the revenue department was saying they were not going to track credit cards and ATM cards withdrawals to this. And then I believe it was in December, they dropped a revenue ruling booklet that said ATM withdrawals should be taxed as reported as remitted income. Now, what that means is if you go to an ATM and you use either a credit card or a debit card from overseas, that's reported income to you, the income you should be reporting on your tax return. Now, they can actually go back in because they're a member of what's called the Common Reporting Standard and track that credit card to the owner of it and consider them tax resident. Now, they're not going to do it if you go one time, go to the ATM and pull money out. But if they can see that being used for more than 6 months or a year, they can go after the issuing bank and get the name of that person who's using that credit card under Common Reporting Standard. Now, they are not yet doing this. Okay.
Now, I understand. I understand that if there's a pattern, then they will investigate that. But if you're just doing this occasionally when you need the cash, do you then need to include that in the tax return?
By the rules and regulations, yes. There's always de minimis exceptions that are too small to bother to deal with this. Okay. So, and that's one of the keys is because everybody's, when we actually did a seminar in Padia that went a bit viral because the credit card announcement got done, but people are like, every time I spend my credit card, that's not what they're talking about right now. Okay, when you go and use your credit card go buy groceries and stuff, they're not talking about checking it. Right now,
They're not talking about
they're not that. They're only talking about when you go to the ATM and pull cash out of that, it's considered a remittance with us. Now, this is very similar to the idea of bringing cash in the country as well.
So can we ballpark the threshold of when you should report the withdrawals or credit card spends in the tax return, and when is it de minimis?
Right now they're considering regular use of the credit card is de minimis. Just regular use of a credit card.
Is de minimis.
Is de minimis.
De minimis meaning
Too small
no need to
not worry
too
about.
small,
Okay.
regular use.
From an ATM threshold, they have no de minimis amount. Whether it's 20 baht or 15,000 baht, there's no de minimis amount to that. It's kind of your judgment. They've not given us any guidance to say this is too big or too small with that, to it. So there's no, part of the chaos of the system. There's no guidance on saying, hey, this should be reported or this should not. With it.
Okay.
Common sense comes into it. If I went to a one-off thing for dinner, probably not. If I've been paying my rent every month for 20,000 baht, yes. But
With the credit card.
with an ATM withdrawal.
With an ATM
withdrawal. So you're going to have to look at that and go, in your own judgment at this particular point, how much do you want to report this in a system that's very loose, but is getting tighter and tighter and tighter.
Pacha, anything to add about like what to expect in the future here?
In my opinion, I expect that the Revenue Department will provide the clarity about the taxation on the foreign social security. Okay, let me clarify. In some countries, double tax agreements indicate that only source country has the exclusive right to tax the social security, such as USA Thailand double tax agreement or Canada Thailand double tax agreement. So if American and Canadian people who are Thai tax resident and remit their social securities into Thailand, so their social securities will not be taxed in Thailand, even the new tax regulation apply. But in some countries, double tax agreement like Australia-Thailand double tax agreement indicates that the country of residence has the exclusive right to tax the social security. So it means that Australian people who are Thai tax resident will be taxed on their Australian social security in Thailand. In my opinion, all of the foreign social security should be tax exempt in Thailand. The reason is that Thai social security is tax exempt for Thai people or Thai citizen in Thailand under Section 42, subsection 25 of Thai Revenue Code, and also in almost every DTA, double tax agreements in this world, there is a clause called the non-discrimination clause. What does this clause mean? For easy explanation, this clause means the foreigners in Thailand should be treated in the same way in the issue of paying taxes under the same circumstances. So in my opinion, if Thai social security is tax exempt for Thai people in Thailand, so the foreign social security, no matter where it comes from, should be tax exempt in the same way for foreigners in Thailand as well. I expect that the Revenue Department will clarify this issue soon.
Okay. I think that would be a big issue that a lot of people want to wait for clarity on.
Yeah. And what about a tax base when selling the property from abroad? Now, the Revenue Department has not clarified this yet whether the tax base is going to be a gain from selling the property or the cost estimate of the property outside Thailand.
Yeah. Real estate sales right now are the big open question. It may not be taxed at all. It could be taxed based upon a capital gain income to it. Or in the worst case scenario for many people, it's done the same system here. It's just a tax based upon the value of the sale of the property, like you would go to a land department do in Thailand with this. all three are kind of possibilities. But if you look at the non-discrimination clause and you argue that it's not taxable because there's no real estate tax here, it's just a stamp duty, then it could be done. But that's one of the things that's got to be ruled by the Revenue Department to this. They will, and they are, tightening these rules and regulations and giving more guidance week by week by week on this stuff with it. And to give these guys credit, they're working hard on this. This is a very, very complex issue because it's not even just, that, you might be an American, you might be Swiss, you might be Canadian and thinking, why aren't they working on mine with this? There's 61 different tax treaties they have to deal with on this thing. 61. And each tax treaty is a unique entity in of itself to this. So you have to be able to go through each one of those. Now, one of the things about this is, we talked about earlier about how complex is a lay person. If you've got a question, we do a free half-hour consultation on this. Come in, there's no charge. We give yes, no answers. And we'll go through the different nationalities in the tax treaty on exactly what you need to this and help you structure this. There's no charge. There's no requirement to file a tax return with us. That gives you, and it helps you clarify a lot of your confusion with this because, we've only got a limited amount of time here. There's nowhere near we can do everything because you start getting into dividends and interest and all these types of things are set up in the different tax treaties with this. This is vastly, vastly complex. Come in and talk to us. There's no charge.
Yeah, and I appreciate you guys having that free consultation that people can utilize because I think this is a big issue. And I understand that for a lot of people who are considering being a resident of Thailand, this uncertainty is a big deterrent for moving to Thailand. But I think you guys, based on talking to you guys, it sounds like things will get more clear in the future. This is going to be a few years of total confusion and headache, but based on your opinions, things will get more clear as the years go by. And I know like a lot of people like to demonize the Revenue Department for whatever, but you keep on saying that they're working hard to bring clarity.
Most countries are worse than this. In that once you've set foot in the country for 6 months, you are taxed on your global income no matter where it is earned in the world to this. So if you were in that country for 6 months and a day, you're going to be taxed on your global income with this. There is a break here in that pre-savings before you become taxable is not taxable here. Before you become tax resident is not taxable here. And only the money remitted into Thailand becomes taxable. Now you can come to us and talk to us. We can give more clarity on an individual basis because again, 61 tax treaties, it's difficult to give everybody an answer to what you specifically need here. But we can talk to you and help you plan on how to minimize taxes using tax treaties, your agreements with this, help you make sure you're in compliance, that you don't have problems later on with this. Planning in this, even what we currently know, can help you out tremendously. Knowledge is key to this. Going in, without any knowledge of like the bull in the china shop, you're probably going to pay taxes you don't need to with it. Planning helps out. And, we did, the last video, I think we did over 500 free consults last year with this. One of the ideas of this is we'd rather you be comfortable and be a client for us for years and years. This is the reason we give a free consultation away. And it's not a sales pitch. We'll sit there and answer the tax questions for you and go by the tax treaty to this and give you real guidance in that time.
Thomas, Pasha, thank you so much for
Thank you, Jet.
I hope this brought a lot of clarity to the viewers. And again, the link to contact that is in the description of this video and the URL just popped up here. So I think we'll end it here. Thank you so much.
Thank you.